Hello everybody, it's Stephen again, and welcome to another video in this series. I really want to thank all of you, first of all, and this wonderful community that I have that continues to send me, messages of support. I really, I do read all of these messages, and it really kind of inspires me to do what I do every day. So thanks for those, and kind of keep them coming. I really wanted to do a video today to explain a little bit more about what happened in the markets last week. Obviously, there was a bit of an anxious time for everybody, as there was some reductions in the share prices of growth companies, especially technology stocks. And this was kind of caused by a number of different reasons. So I think one of the main reasons was that the interest rates are beginning to rise because the bond yields were rising. And this kind of has caused some issues with technology stocks that really do well in situations where interest rates are very low. And so this was kind of one of the factors that kind of came into play. Kind of later on in the week, there was a speech by Jerome Powell, who's the chair of the Fed. There was a lot of hope that he would alleviate some of those interest rates rising issues, but he didn't do enough to do that. So there was still a lot of fear and apprehension after his speech, which kind of caused a further sell-off in stock prices. But that is something that they will continue to review, I'm sure. So that's one big effect on the market. I also think that there's been a shift. I think that technology stocks did very well in 2020 in a situation where many economies were locked down. So I think a lot of money went into those technology stocks, and I think now as the economies start to open again, I think we're seeing a rotation a little bit into kind of COVID sensitive stocks, as many sectors start to recover after COVID-19 and the positive vaccination programs that are being implemented around the world. So I think that is pretty natural. I don't really want anybody to worry too much about technology stock moving forward. I think that they're going to be fine overall, and I think they're actually going to perform pretty well in 2021. I'm continuing to hold my technology stocks, but what I've done is I've further diversified into other areas, which I think will do pretty well in the short term and medium term, as our economies go back to a little bit more of normality. So some of the stocks that I've bought and added to our portfolio this week is Aetna, which is a very strong insurance company. I think that they're going to see the benefits of slightly increased interest rates. I think that's going to be very good for Aetna moving forward, and I expect that to perform very well. I've also added into the mix a new stock, which is Wynn Casinos in Macau. Recently, it was announced that Chinese mainland citizens would be able to visit Macau more freely after a relaxing of COVID-19 regulations. I think there's been a lot of pent-up demand from Chinese consumers to visit casinos in Macau, and I expect them to have I expect that to do very well moving forward, and we see a big flood of Chinese mainlanders visiting Macau. Another one, I've been saying it before, but I expect a commodity super cycle for many reasons. I think one of them is that there is a continued fear of inflation and the US dollar becoming weaker. So I've actually made two kind of commodity share plays this week. One is one of the largest Russian nickel producers. Nickel is a precious metal which is very much used in industrial uses. It has a lot of different industrial uses, but one of the biggest industrial uses that it has is actually in the making of EV cars. So you've actually seen people like Elon Musk to say that the future production of nickel is very critical for a company like Tesla, and he expects some shortages in the future. So I think that's going to bode very well for the price of this nickel play that I've actually done this week. And another one also is Chevron. I expect the oil price to continue to rise in the short to medium term for a number of reasons. So first of all is that OPEC, the Oil Council, actually met recently, and they decided to keep the quotas in place for oil producing nations to produce oil. So I don't see the supply of oil increasing dramatically, but I also do see the demand of oil increasing as economies go back steadily go back to some sort of normality. So I expect oil prices to rise in the short to medium term, and then we'll kind of see how that progresses over time. So those are some of the plays that I've made this week. I think it makes our portfolio a lot more diverse, and I think it kind of and I think a lot of people are asking, what is your plan if there is a downturn in the market? And I think my key answer to that is my portfolio is the way that I plan to deal with if there's any weakness in the market, because we have a very strong portfolio, and there may be times where there might be some rotation and some certain sectors may be favored at a given time. But I think if we have a diversified portfolio with good quality stocks, I think that this is going to be really important to our future performance throughout 2021 and beyond. I also have a fairly large cash position. So if the growth stocks were to bleed some more, I also have some cash in play to be able to take advantage of and seize these opportunities. I'm kind of not there yet with that, using that cash position for growth stocks. I prefer to kind of wait and see over the next couple of weeks and see how that progresses. But I think that the diversification strategy that I've put in place helped to allocate some of that money, but we do have some on hand to take advantage of these future opportunities. So any other developments? Another development was Johnson & Johnson also had a new COVID vaccination approved last week, and that's actually a single dose vaccination. And President Joe Biden has actually said that he hopes by the end of May 2021 that all adult American citizens will have been vaccinated for COVID-19. So that's a kind of a really kind of positive development moving forward. Another one, as we kind of move on to China as a market, I'm very positive on China. And one of the reasons is I think that obviously they experienced COVID-19 earlier than the rest of the world. And then they've actually also had, very good policies in place which actually managed to isolate COVID-19 and stop continual spreads of it around the country. So a lot of China has recovered pretty well. So they're more advanced than a lot of the developed world in that sense. So I expect them to do very well in 2021. And actually recently, last week, China announced that their plans were for the country to grow by 6% next year. A lot of analysts say that that is a conservative figure, but I think they're pretty wise to put that in place. But I do think that they can surpass that. So you may see in the future that I may take a few more positions in Chinese related stocks, because I expect them to perform very well. So I'm going to keep this video quite short, just explain to you informally what happened in the markets last week. I hope I kept it fairly simple for you. Again, thank you all for listening to my videos. Please subscribe to my YouTube channel as well. That will help me out a lot, and also allow you to be able to get notifications when I upload new videos. And as usual, if you have any questions, please feel free to leave them in the comments below. And thank you all for listening, and have a great end to your weekend. Thank you very much. Goodbye.